Hello guys, welcome back. So today's review is on the German 30. No, US 30. I had two trades today. The first was in London session. That was on the German 30. And during the New York session, I had buys on the US 30. I'm not going to review the German 30 because the setup that was in the German 30 is the same setup that was on the US 30. So if I show you the US 30 setup, you can be able to apply the same principles on the German 30 and then be able to understand how I took the trade. And as usual, before I go in further, just please understand that I'm not a financial advisor. Do not use any materials you find in my um, social media accounts on this YouTube channel as a financial advice. All right, so thanks to you guys that have subscribed to the channel, those that have left likes and comments, and those that have followed me on Twitter, on Instagram. And I would like to ask you guys, especially those that are on Twitter, whenever I make some tweets, could you try to retweet so that we could reach as many people as possible, so that if you're benefiting from what I am sharing, more people can also benefit. And I do not have a trading course, trading academy. I am not giving out signals because I've had people messaging me and asking me, what do you think of this pair? What do you think of NASDAQ? What do you think of the US 30? Uh, and such questions are so difficult to answer because I do not know what this fellow is about to do. Probably he has deposited $500 in his account and he's looking for a signal and then go full margin on that small account. So I'm so careful answering these type of questions because I do not know what you are doing. Even if I were to tell you that, okay, NASDAQ is bearish, okay, most of you would instantly go and start selling. But the bearish I'm talking about is basically a bias, and then you just have to go and find the setup and the entry. So, and that's why I'm so extra careful answering this type of questions of what do you think of this type of asset? Is it bearish? Is it bullish? But anyways, so as you know, I always start my analysis by locating liquidity pools, and obviously we have liquidity pool right here and right here. Okay, so and when I checked, there is this liquidity grab. Obviously you already know this was yesterday. Okay, these demarcations you see here, this is yesterday, this is the day before yesterday, and this is today. So when I realize that price has taken liquidity from these lows in Asia, I have an indicator that shows sessions. So this is Asian session, and okay. So when I saw this on this bullish candle is where London opened. Price has already taken liquidity from the sell side liquidity from these swing lows. So when I go to M15, all right, M15 now this is where New York just opened, but we are still waiting for the stock market open. So which is 6:30 my 4:30 my time and 9:30 in New York. So now there was a break in market structure. Okay, there is a liquidity grab, that is one. Liquidity has been taken, that is one. a break-in structure, that is 2. And now, because we are a few minutes away from the equity open, we have an order block. We have this order block that broke this structure. So we have a bigger structure that has been broken. We have a substructure, a mini structure or a small structure that has been broken as well. So that is a good confirmation. And then let's use the replay button. Okay, so this is, we have 15 minutes to go for the equity open. Okay, now take note of this. So how many confirmations do we have? A break in structure, sorry, I beg your pardon, a grab of liquidity from these lows, a break in structure, bigger structure, and this structure also broken, swing high broken, swing high broken. We have a bullish order block. We have this consolidation. What does it mean? It means we have liquidity above this consolidation. Let me change the color to white. So we have this liquidity above this consolidation. And now we also have another breaking structure. Can you see it? Let me zoom in. So we have this high that has been taken out, and now price is coming back. So if I use my fib from here to here, okay, my entry, I put a buy order right here. My stop loss was below. You see, let me remove this. You see, when price took out this this swing high was taken out, this bearish candle becomes the order block. So I put my buy here and my stop loss below the order block, and my target was above these highs. Right there, above these highs. And that is, it was almost 1:8. Yep. All right, so let's see what happened. And boom, it was hit. You can see no drawdown, easy, no drawdown. And price started retracing. By this time I was already out, so I held for about, I think it was 15 minutes. I was already out. So to summarize this, do we have a glove in liquidity? Yes. Remember, the name of, I have two types of models that I use, one for long-term trading and short-term trading. This is short-term, but you can see in my short-term trading, I can also get 1:6, 1:7, 1:8. But as the name of my As the name of my strategies says, I'll footprint concept. That simply means until I see grab of liquidity, I am not interested to enter the market. Until I see the liquidity. That is the only way you can tell the footprint of the smart money algorithm. The only way. If you have other ways, good for you, but that is the only way. And then people ask, why do I have a higher win rate? Okay, so a grab of liquidity, yes. A breaking structure, yes. An order broke, yes. Um, Liquidity pool, the targets, yes, we have it. And the price comes in our zone to buy, yes. As simple as that. So if you go to what is this? German 30 and apply the same thing I have just shown you here, you will find it's the same thing that repeats over and over and over and over. Most of you, or rather most of SMC traders, you would be highlighting this, this imbalance as an area to short. This imbalance is not bigger than this break in structure. And this is a direct answer to most people who ask me, did you make your entries on that FVG, on that imbalance? Let me make it so clear. I do not make my entries based on imbalance. Imbalance or FVG, I only use it to, what is the word? To, um, is it to qualify or to validate? Yeah, that's the word I was looking for. I use it to validate my point of interest. Let's say, for instance, this is a bullish order block. So in order for me to validate that this is truly a bullish order block, I need to look for this imbalance. Why? Because a real, listen to me, these are some of the questions that you've been asking me. A real and valid order block should have two things. We should see a grab of liquidity. Around that order block, there should have been a grab of liquidity, which you saw here. Number two, when the price leaves that order block, it should have so much momentum. There has to be great volume, so much volume, a big displacement that will leave what I call it. Let me show you what I call it. And I know some of you will start saying that I'm changing terms, and I call it one side price delivery. This is what I call it. Why do I call it this way? Because price has been the price delivery, I mean, has been on one side, and that validates my order block. And if I should give you more examples, let me look for more examples of this, even though this was not supposed to be a teaching video. I'm supposed to be reviewing only the trades. Okay, look at this. I want you to look at this. This horizontal line was a grab of liquidity, and then we had a break in structure right here. You see all these bearish candles, that is what I call not other traders, myself. This is what I call as one side price delivery. And who is this guy? Chris Lowry, this is what he calls liquidity void. liquidity void, because there was only one side delivery in price. And then if you go here and start looking for uh, FVG, you will find an FVG here. You will find an FVG in here. You will find an FVG in here. An FVG in here. So which one are you going to use? You see, that's why I use. I'm not saying you should do the same. I am telling you the things that work for me. You should choose on what to um, on what to do, on what to use in your model based on what you seems to be working for you. The only time I use FVG, take for instance, you see all these candles. This is a liquidity void or one side price delivery. Price had to come down to touch the order block. Here, price had to go up to touch the order block. The only time I can use FVG, it's when there is a series of bullish what's this? A series of or rather a mixture of bullish and bearish candles. Then instantly at one point there is a price um what's this? There is a one side price delivery. Okay, at some point, at one point, then price has to go back at that zone. Let me see if I can find what I mean. uh, I hope. Look at this. Okay, I just found it. um, you see, from here to here, from here to here, can you see the difference? Here we have bullish and bearish candles mixed. Can you see that? Here we have the same thing. But there is a point where there was a one side price delivery, and here it is. Can you see that? It's like a jump in price. It's like um, so much volume comes in the market, and then there is only one side of delivery in the market. If I was able to speak a better English, I would find a way to explain this, but unfortunately, my English isn't that good. So you see this? Can you see that? Can you see that? This is the true and the real FVG, or a gap imbalance, a gap FVG, fair value gap, fair value gap. I think I said it correct. Let me see, fair value. If you judge me based on my poor English, you will not get the best out of me. Okay, can you see this? Bullish, bearish candle mixed. Can you see that? Bullish, we have a small liquidity void, but we have a bullish candle here. But all the way from here up to here, this is the only place we see a huge bearish candle without a bullish candle. This is what I personally call as a fair value gap. And I know price is going to climb back up to fill in this imbalance, and then we continue down. But if you are going to go in here and look for FVG, price is going to come here. It will not. Price is going to come in here. It will not. So you need to know to differentiate between liquidity voids or imbalance, inefficiency, and fair value gap. You need to know the difference between these two. Otherwise, it will continue to confuse you. You see, like this. Look at this. This is FVG. Price went up beyond it, right? Why? I know you guys are gonna call me names, but this I don't personally. I do not call this as an FVG. This is a complete one-side price delivery or liquidity void. Price has to come and fill all these imbalances. The only time you are going to, let me look for another example of an FVG. In here, you can call this as an FVG, yes, but for me, it's not because we have more. If these candles, if we had this candle bearish, one of these candle bearish, this would be an FVG for me. If we had one bearish candle, and then this can be a gap that I would consider. But let me see if I can find something that would make sense to you. If I don't find it on this pair, I can, let me look on Nasdaq. I'm sorry. Let me look for it for you guys. I know I will find it. This, even though we have a series of bearish candles, but this is also a good fair value gap. Why? Because from here to here, we have no energy in the market, and you can see at some point there was bullishness in here, bullishness in here, bullishness in here. But from this candle, price delivered one side. We left this gap and this gap. All right. Now, when you see two gaps, consecutive gaps, it means price will come, is likely to come and fill the first one. Because when it fills the first one, this one will be filled already also. Okay. But I want to look for the perfect, like another perfect example of an FVG, and I'm gonna find it. All right, I just found it. Here we have it. On the 15 minutes time frame, we have two. We have the first one, and I will explain, and the second one. Why? Because we have bearish candles here, a bearish candle here. So we have bullish, bearish, then market jumps. Look at this volume. Then we went up, we had a bearish candle, we couldn't fill this imbalance. Then price jumped again. Then we had volume in the market again. Here, sorry, I'm not so good with some of the features of trading view. So that means between this week and this candle, all this is a gap that price has to come back in. Can you see it? It's a standalone. I don't know the best words to use in English. Uh it has to be at one place, a standalone. You guys, I don't know how to say it in English, believe me, but you see what I mean. I don't want a series of bullishness in here. I don't want a series of bullish candles, a series of bullish candles. That is not an FVG. That is a liquidity void that price has to come and fill. And the fill of that liquidity void is massive. But when we have a gap like this, price will come tap in and go up. The reason why you see this consolidation is because we are not in the New York session yet. We are still in London. Okay. So, and even if you see at this one here, now one thing that people don't understand is when we have an FVG, it doesn't mean it's going to be a bullish FVG. It can be bullish or bearish. Price can just come, break this FVG, and then retest it to continue down. So the bullish FVG turns to bearish FVG. These are some advanced things that will confuse you, but we have an example here. But this was closing time because we had the start of a new day. You see how price goes through it, leaves an order block, retest it, and then we go down. So that's enough for today, guys. I have shown you how I took the trade on US30. I have spoken on the order block. I've spoken on imbalance. By the way, this is just in few words. I'm going to start explaining in more information further on these topics: order blocks, fair value gaps, and you help me by smashing that subscribe button, likes, and leave a comment, share with other people, do the retweets. Guys, help me by retweeting my tweets on Twitter, those on Instagram. Um, yeah, share with friends. I do my best actually to respond to you, to your questions. However, do not expect signals from me because you will not be able to grow through signals. You need to acquire knowledge and be able to um, execute trades on your own. So until then, take care and keep the fire burning.